Hi guys, good morning, good afternoon, and good evening wherever you are watching this video from right now. Uh, it's a new trading week, and I hope most of us, well, I believe for you to be watching this particular upload now, it's probably gone through, you've most likely gone through all my previous uploads for now, right? And I would use this opportunity to say if you've not, if you have by adventure not gone through the very first video I uploaded, the second one, the third one, down to this one, chronologically like that, I would advise you to please, you know, pause this video. This one is going to be a very brief one because I'm simply going to be explaining candlesticks, in this video. But then I want you to pause this particular video right now and try and go back to the videos I had uploaded before, right? I'm not trying to waste your time. There's a reason why I uploaded those videos. Yeah. Do not be discouraged maybe by the title or because I wrote for beginners and all of that, right? While I'm giving beginners their nugget, some other talks, some other questions will come up that I would have to attempt to, I would put a pin on whatever I'm talking about and quickly branch into that topic, right? And why do I do that is because most of my video sessions, most of my, class sessions are always interactive sessions in the sense that I always make sure to have somebody, live there with me that can either, when I say live, not necessarily in my presence here, it could be maybe on a Zoom meeting or any other meeting, right? But then somebody has to be there so that I can get feedback, I can get questions from you, and then also be able to know that yes, whatever I'm talking about, you understand it, right? So, due to the fact that most of my sessions are usually interactive, I would advise you to, go back to those videos first so that you'll be able to understand most of the things I'm going to talk about here. Now I am on the TradingView platform, right? If you do not know what the TradingView platform is right now and you're on this video and you are confused by anything that you are seeing on this screen right now, if you are confused by anything you are seeing here, you really, really, really need to pause this video now and make sure you go back to watch the other one, okay? And other than that, I would also like to, I'm going to always, always, always say it in my videos, even when I'm, mentoring on the community page. I would say it in text form. I would say it verbally. I would say it in video form. I would say it in any form necessary. Please make sure you have writing materials beside you. Yeah, as a trader, the day you get to realize that writing materials, reading materials, a pen, a book, it's your friend. That's the day it's feel like a veil was lifted off of your eyes. You just understand something so basic. As a trader, you always need to jot things down. As a trader, you always need to, anyways. That's why I said, just make sure you pause this video right now and you go to watch the previous videos. Okay. Now let's go into my topic for the day proper, which is candlesticks. Yeah. The reason why I'm venturing into candlesticks was during the last class. Well, in this class, I also have JD here with me. Anybody that has watched the previous videos already know who JD is. He's an intermediate trader in the community too, right? And we usually hold these live sessions together, right? Where I just try to touch the very, very basic things that I'm also explaining to everybody on the community. It's literally the same thing, that we're doing here. Okay. Now, the reason why I'm branching into candlesticks today is because when I was making the previous video, I realized that without explaining, candlesticks and candle formations or candle patterns, some people actually do not understand what these green and red things are. They don't understand what are all these small lines. Why is this one full? Why is this one very tiny? Why is this one like this? I get all those kind of questions, and then I realized that okay, I need to make a brief explanation about candlesticks, candle type, candle patterns and formations. Okay, it's going to be very, very brief and very brief, right? Now, when you come to trading view, I believe trading view is usually default on the candlestick kind of chart. Yeah, we have different types of charts. Some people use line, just like graph. You have line graph, you have pie charts, you have all of that. The same way we have different types of graphs here. Some people use lines, like on Berry, you see that it's just becoming like a line. Yeah, if you've opened your Berry platform, you know what I'm talking about, right? But what professional traders use is called candlesticks. Okay, and the reason why candlesticks are used is because it makes it easier for you to understand the market. Candlesticks literally is the only thing that will show you a buy and a sell in this sort of diagram. Other lines, you just know that the line is going up and coming down and going up and coming down. You will not know where your sells are. You will not know when it was buying. You will not know when it was a week. You will not know where there was manipulations. You will not know your support. You will not be able to draw most of these things. Yeah. Now, I'm not saying that there are obviously traders that use different methods. There are traders that would use that same line graph and you know what they are doing, because that was what they researched on and learned on, right? Most people in my academy already realize that, because they realize that, because I say this a lot. I say that there are several methods, several ways, to arrive at the same bias, to arrive at the same direction in the forex market. I decided to, because I decided to use a trend line, and you are deciding to use a rectangle, that does not mean we would not still arrive at the same, bias. Maybe I'm going to be selling or not, maybe I'm going to be buying or not. It does not mean we are not going to arrive at the same bias. So if you see anybody that is not using a candlestick chart, yeah, that doesn't necessarily mean the person does not know what he is doing. That is probably what he pays his attention to. Okay, so since that is settled out, let's go directly into candlesticks. Okay, now I'm pretty sure the most obvious part of it is that we have the red candle. Yeah, we have the red candle and we have the green candle, right? I believe the red candle means sell, right? Means sales are occurring, while the green candle means buys are occurring. Yeah, I believe those are the two types. So when you see a green candle, price was moving up at that time. When you see a green candle, it signifies price was moving up. When you see a red candle, it signifies that price was moving down at that moment, right? You can see that price was here at this point, moved down here, created some structure. You can see green candles all the way up. Whenever you are seeing green candles, just let's know that it is synonymous with buys, with moving up, yeah, with upward impulses, with upward movements. Whenever you see red candles, know that it is synonymous with downward movement. You can see this red candle started from here and then kept coming down. Yeah, I'm going to explain the candle patterns, the candle types, and parts of a candle. Let us go straight into parts of a candle. Yeah, since we already know our candlestick types, it is a buy or a sell. A candle is literally always the same, it's always the same shape, it is always the same, always has the same structure, always has the same parts. The only thing that will be different now is going to be the color. So let's say this is our sell candle. Like I said, sell candles are always red, yeah? So this is the week. Then we have
red means sell.
Red means sell. When you see red candles, just know that sales are happening. When you see green candles, know that buys are happening in the market at that point. This is our green candle. Yeah. So like I said, when you see the red candle, it means it's a sell. When you see the green candles, it means it's a buy. Right? Now, for parts of parts of the candle, parts of the candlestick. Parts of the candlestick, we have the wick, we have the body, we have the upper shadow, we have the lower shadow, we have the lower shadow, upper shadow, we have open, we have the close. Right? I believe that's all. We have the eye, right? We have the eye, we have the nose. Right. Now I know it looks it looks like a lot here, but then I'm going to break it down for you right now, okay? I said on a candle, yeah, we know when you see a candlestick, your candlestick might not necessarily have a line on top of it, though. It might also be, a complete full candle like this without any wicks. It might be a full candle too. So do not always expect that when you see a candle, you have to see some sort of wicks beside it. It might also be full length candles like this. Look at this. This is a very, very valid example. No wick at all, right? This one still have wicks. This one have. Look at this again. Very almost perfectly full. Look at this. Almost perfectly full. Yeah. So it's not everything. Look at this. This one is a very perfect candle, right? So we do not always necessarily see wicks in every candlestick. Now I am going to explain why wicks occur, but then first of all, I have to label out the parts, of the candlestick for you to be able to understand it, right? Now, the the basic the basic thing you have to first of all know about the I'm going to continue. I'm going to continue. Sorry guys. Uh I'm, let me just quickly get done with this explanation. Okay? This is the body. This is the this is the eye, right? This is the nose. This is the open. And this is the close. Now, the only reason why I am taking my time to at least give a foundational explanation about candlesticks, is so that you can just understand what you are looking at. Knowing the names about wheel, eye, open, close, body, low, it is not important. We hardly use them, right? What we usually use is just body and weak, But it's not much now. It's something that is very easy to actually understand, right? And I'm going to explain why it is like this. Now, the reason why on a sell candle, okay, let me explain like this now. On a sell candle, we know price is coming downward, right? Price, this is the proper sell candle, right? But imagine in this scenario, now, What do you think is happening here with price? If this is a full red candle, then the price is supposed to be coming down. Okay, no. It's going to have to be the other way around. This would be a green candle. I'm using red as our illustration. Right? Sorry, don't mind my drawing though. Like this now. Alright, this is what we have here. What do you think is happening here? Price opened here, right? Like I said, we always consider the body of a candle, right? We do not use the, when we want to look at the open and close of a candle, we always use the body to mark open and close, right? Even if your candle is like this, if your candle is like this here, and the wick is so long like this is your open here, this is your close of the candle, right? We only use the body. The body of the candle is the solid part of the candle, right? Not the wick, the solid part. So the open of the solid part of the body, the beginning of the solid part of the body of the candle is called the open. While the closing part, the closing of the solid part of the body of the candle is called the close. Let me go through that again, right? Where a red candle begins, let's go to our chart so we can see it very clearly. This is a very perfect example, right? Look at this. This obviously means that price after this green candle here, price came somewhere up here. It's that obvious. That price retraced to somewhere here. When price got to this place, it started falling back down, right? When price will fall, price got to this place. Let me zoom in so everybody can see it really clearly. Look at this week. Like I said now, on the on my listing of the parts of the body of a candle here, I said this is your wick, this is your body, the solid part is your body, this is your low, this is your high, this is your close. Yeah, that is exactly what is here. From here to here is your wick, right? This is your wick from here to here. That's your wick. Your body starts from right here, to here. This is your body of the candle, right? This is the open of the body. This is the close of the body. Now, this is the low of the candle, and this is the high of the candle. There's no much explanation to it. It is pretty basic. It is pretty self-explanatory. You just need to look at this diagram. We listen to the explanation again over and over again. Do your own research again, and then I believe you should easily get it. There's no difficulty to it. It's very self-explanatory. The body is always going to be used to check your open and close. If this is your candle, this is your open, this is your close. If this is your candle, this is your open, this is your close, right? The eye of the candle is the high. The lowest point of the candle is the low. Anything like that looks like a line is the weak. That's pretty self-explanatory, isn't it? Do you have any questions? Look at it. Let's just look at an example. Now, in this kind of situation, this particular candle now, right? This is a weak. The beginning of the solid candle, the beginning of where it solidifies is going to be the open, right? Where it stops is going to be the close. You see that there's like literally little to no weak below it. So right now we cannot say there's a weak below. So this is also going to be the low. The lowest point of the candle is the low. The highest point of the candle, including the wick, is the high. When we are considering highs and lows, we consider the wicks, right? But for the body, we only consider we only consider the body when we want to say the open of a candle and the close of a candle. If I say what price did this candle open at right now? Yeah, I want to know what price candle opened at, and I say you should tell me. You will not place your open here. That will be the I. If I say what price did this candle open at, you have to start measuring it from the body of the candle for me. So that's around 1.44608 or 600 ish. That was where the candle opened, right? Where did the candle close? The candle closed at 1.36684, right? You see, I'm not putting it at the bottom of that candle. But then if I ask you that where is the eye of the candle, you have to measure it from the topmost part, including the wick, including whatever is there, where the candle reached its highest point. That happened at 150346. Where is the low of the candle? This is the low of the candle, the last point the candle went to. That's the low, right? If I say where's the open, it is the beginning of the solid body. Where's the close, it is the ending of the solid body. Let's use another random candle for example, right? Let's use this now. Look at this. This one has a whole different kind of, wick, because the wick below is longer than the wick above now. Abi? So here now, if I say it again, so where's the open of this candle? So again, this one, where's the open of this candle? We have to measure it from the exact top where it started from. You can see it. That's the exact top of this candle. On top of that wick, right? No, sorry. Where's the eye? That would be the eye, not the open, right? The eye will be directly where the candle started. The open of the candle, which is the open of the body of the candle, will be where the solid part started, which is here, right? The close of the candle, that is the close of the body. When you hear open and close, just know that you are referring to the body of the candle. When we say high and low, we are referring to including the wicks or including whatever is there, right? So I think I repeated that like 4 or 5 times. If we can pause, rewind this video, write it down, read it word for word, write it down for that I'm saying it. I believe it should finally sink in. But then I believe you get the basics concepts now. That's what I want you to know about the parts of the candlestick. It is very, very self-explanatory. There is no difficulty in understanding it, in knowing what you are doing. In this kind of scenario, this will be the eye of this candle because that's the highest point. This will be the low. No matter what kind of formation it gives you, no matter what kind of candle you are seeing, if they ask for the open and close, they are referring to the body. This will be the open of the candle body. This will be the close of the candle body here. We are not bothered about what happened to the wicks, unless we are looking at the eye of the candle and the low of the candle. That's the difference. And we can see that body is already self-explanatory. Now, I believe there are 2 more words that I have left out, which is the upper shadow and the lower shadow. Those ones are even the simplest, The upper part of the wick is the upper shadow, the lower part is the lower shadow. This upside, any wick that occurs to the upside has an upper shadow. Any candle that has a wick to the downside has a lower shadow. That's simple. The wick is the shadow. If the wick is up, that's the upper shadow. If the wick is down, that's the lower shadow. I will say that in this kind of scenario now, the way we use that is I would say the upper shadow of this red candle here is larger than the lower shadow. You can see that the upper wick has a lot more length, right? But in this kind of situation here, let me look for one. In this kind of situation here, we have to say the lower shadow of this candle now has a lot more length than the upper shadow of this one, but it also has an upper shadow because it has a wick there. You get it like that. That I believe this parts of the candlestick, I believe it's very, very self-explanatory now. It is the same thing for a buy and a sell, right? Sell candle and buy candle. The only difference is the color. In fact, Just because the universal color for buy and sell, we know it is green and blue. Yeah, I'm pretty sure we all know we can customize these colors to whatever we want. Yeah, because I said it in the video about the trading view platform and the things we need to the tools we need to use, right? I think I said it there that if I wanted to change my color of my chart, I can actually easily change it. This is now blue and red, right? It's all about you knowing, you know, you being able to understand and read your chart, you knowing what you want to do, you knowing what you are looking for, right? So I'm going to leave it at the color it was before. One, two, there you go. Right? So don't be confused. The reason why I did this now is so that you not see another chart that is looking purple and black or red and something else, and you'll be wondering that what kind of chart is it. Yeah? All you have to just understand the structure. When you see the ones that were caught that kept going up, you would have known that it's this green one that is happening that is going up now. It's the green that is happening. Anytime this red happens, it looks like it's going down. You would have already what? Wait, it's what's this is GBP USD. This is pounds US dollar. I'm going to explain. We are going to when we get to making our analysis, all of the way it is moving is not going to look surprising to you anymore. The first step is understanding these candlesticks and candle parts, because sometimes when we're trading, you will hear me say, the price came and wicked into my zone. It means it just went into our zone and created something like this wick. You see that it's a wick that touched this zone and touched this line, not a full candle body set. So it just wicked into that. When a wick happens there, you know that the movement that occurred in that place was very fast. It just like after this green happened, do you believe that there was another green that opened here up to this point before pushing back to this empty place and creating the original movement down? That's what usually happens. So that green came here. Boom. Now when a rush movement, when an impulse move, when a very fast, swift move occurs in the market, that's where we see it happening. That's why you need to just understand. See, it's not about understanding the breakdown, everything. Just understand the basic terms, terminologies that are used in trading. If you watch the first video I've uploaded, I talked about the terms, the glossaries, the vocabulary of words used by traders. That's where you hear resistance, support, supply, demand, trend line, zones, wicks. So all those things are things that you also need to sit down. Just a simple search on Google would give you a lot of information that even I cannot explain enough, right? There are a ton content even here on YouTube everywhere for you to watch. But if you just type candlesticks, I promise you, you will watch videos, you will sleep, you will wake up, you will watch again, you will sleep, you will wake up. You can never ever exhaust the contents that are available, right? So all I can do, all I always do, like I said, like everybody knows me, I only try to just drop basic knowledge that you need for you. It is left for you to now go on, research and build your foundational, ideas, foundational strategies or all of that off of the knowledge you now have. Okay? So since this is quite clear and explanatory, I believe I can rub that off and get to the last, aspect of candlesticks that I just want you guys to understand, so that when you see those patterns and formations, you will not be surprised. And that is where we get our candlestick patterns and candlestick formations. Yeah. Now, candlestick patterns and candlestick formations to me are really one and the same thing. Traders in the intermediate community already realize that in trading, we have different people that find out different methods, that understand different tools. Yeah. Somebody that knows how to use only smart money concept, somebody that knows how to use only trend lines, somebody that knows how to use only zones. They might be using different words to refer to the same thing in the market. Today in class, today in the intermediate community, while we were having analysis, I believe someone asked me a question. Is this? He showed me a structure in chat, and it's like, is this a break of structure or a break of? Is it a break of market or a break of structure? But like, is this a POM or a POS? And I was like, okay, you tell me what is the difference between a break of market and a break of structure, right? This usually occurs, I'm not going to go into that right now, but this usually occurs when market has been uptrending for a while like this, then suddenly it starts coming down. When it breaks the previous low that occurred, that is where we have a break of structure. This is a break of structure here. This is a clear break of structure here to here. This red candle that is coming, this red impulse came down, broke the previous low, and kept moving downwards. Yeah? That's the break of structure. It's very easy to spot in the market. This is another break of structure here. It was going up, got to this supply zone, came down here, broke this structure here. Right? When we are making analysis, we are going to understand why break of structures are important. But before I digress too much, what I was trying to explain is we have different terminology, different words in forex, but they are referring to the same thing. So when you see candlestick patterns, candlestick formations, they are the same thing. A pattern and formation, literally the same thing. A coach that is playing for 3-3, it's a pattern, it's a formation. Yeah, that's how it is. I'm going to try and make a little illustration. The most basic pattern that you would ever see, that is always, everly happening in the market, is your engulfing pattern. Yeah? As your engulfing pattern, we have the two types of engulfing. Now we have the engulfing pattern. We have the bearish or bullish engulfing pattern. Yeah. Now, what does bearish engulfing or bullish engulfing mean? Right? You can see that we had a green candle, right? And what does green candle mean? It means price is moving upwards, right? If after, on the this usually is taken on the higher time frames. If you know me and my methods, I prefer to always be on the higher time frames to get my confirmations, to get my directional bias, to get anything, right? I only look for confirmations, entry refinements on lower time frames. So when you see a green candle that is immediately followed by a very large red candle, it is said that that red candle is engulfing the green candle. That is actually pretty self-explanatory. It is swallowing it up, it is engulfing it, right? This is a clear example here. This is a green candle. This is a green candle. If I was on this trade, like I said, if I was on this chart at this point and I saw that market got right here, okay, let's say market gets here, all right? Okay, not even there. Right here. Yeah. So I'm in this trade now, and market has gotten to this support. I'm of the feeling that it has created a one green candle. Wow, it has created another green one. It means this thing is going to continue pushing up, right? But then suddenly, I'm waiting for my confirmations. Then what happened? I'm seeing a red candle suddenly happening. That red candle got to that red candle got to this point and engulfed, rather than continue green, it engulfed even the candle that created it, right? Engulfing candles would always cover it. Engulfing candles must always be longer than the candle that it is engulfing. That's why it is called the engulfing, like swallowing it up, right? This is another example. When I see an engulfing candle like this suddenly on the higher time frame, I know that market has changed direction because it has already broken these wicks. Yeah, I'm going to explain why weak fills, weak rejections are also important. But as long as you see that now that I mentioned weeks, you are not surprised. You know what a week is, right? You already know that it's this line that I'm referring to as weak, right? That's why it is. That's why this explanation was important, right? Engulfing candles, whether the candle has a wick or here I did not draw any wick now, but whether the candle has a wick or not, it must engulf it. If this wick extends like this is not an engulfing candle because it did not engulf it fully. Yeah. But if you have the wick like this, even up to just somewhere here, it has engulfed it, right? Which is very obvious in our example that we chose here, right? You can see it clearly. Market was moving upwards. We were of the notion that it's going to continue going upwards, and then suddenly it created an engulfing candle to the downside. Once I see this and it closes, I am going to take a sell entry because that's just like a confirmation that market has changed structure from the up direction to the lower direction. If it happens in the opposite way too, look at this example right here. This is a red candle. We have a green candle completely engulfing it. Even the green candle sef had a wick, right? But it has to engulf the previous one completely, whether it is a wick or whether it is with the body. That is the bearish engulfing. Now, when the sell candle comes before the green candle and the green candle is engulfing it, that's the bullish engulfing because it is the bull candle that is engulfing it, right? It is the bull candle that is swallowing it. I'm sure we all know what bull and bear is, right? I'm sure we know the bull is buy. When you hear bull in the market, it means buying. When you hear bearish, it means sell. Yeah, you hear bear, you hear bearish, it means we're selling. If you hear bull or you hear bullish, it means it is looking to the upside. Yeah, all of these are terminologies that are very important. Red candles means sell. It means it is a bearish candle or a bear candle. You can call it a bear candle, a bearish candle, a sell candle, a red candle. You can call it a green candle, a buy candle, a bull candle, or a bullish candle, right? So when a bullish candle is engulfing, when a bullish candle is engulfing a bear candle, you know that it has changed structure to the upside. On the higher time frame is where we do all of these things, right? When you see a bearish candle engulfing a bullish candle, right? We have the word bearish engulfing because just look for which one is engulfing and that is the one that is engulfing. That's the thing we put it on, right? You come to your chart, it's quite easy. Let's just look for any random one. Okay, what is happening here right now? We have our sell. Let's use this one, which is very, very obvious. We have our bearish candle. Yeah, I'm not even going to use. Let's start from where the sells or buys actually started. Not just put it off in the middle. Thank you. Trying to look for a perfect one. Now the reasons why these ones are not perfect is because you can see that this B is not on the same length with this candle. You can see that from my drawings here, they will both have a common beginning or ending depending on the kind of engulfing it is, maybe bearish or bullish. They have to have like a flat top together, right? So we look for perfect ones like the ones that we just used for our example. I just saw those ones on the link. Okay, this is a very, very perfect one here. Very perfect one here. Now look at these two. Look at these two, Now look at these two candles that I just highlighted. Yeah, this red and this green. You can see that this red candle and this green candle now, they literally have the same bottom, but that green candle is totally engulfing it, swallowing it from bottom to the top, covering it completely, right? No wick must be allowed to escape from the engulfing. If not, it does not qualify as an engulfing candle. Those are criteria that have to be met. We are going to talk about that in later classes when we are looking for confirmations for your engulfing. But at least you have to know what the engulfing candle is, the engulfing whatever is, before you will know how to look for the confirmation, right? So just know that an engulfing candle has to engulf it completely. When you see that it is completely swallowing it up, this is a bullish engulfing, because the bullish candle immediately after this one, it covered it up completely, and after that, what do we see? We see our major impulse to the upside. You can back test your chart, you can look at your chart many times, on and on and on. I promise you are going to continually see instances like this in the market, yeah. It is left for you to now know how to read and actually find the ones that are the true candles, the ones giving you that actual confirmation. You will not just look at all these random ones and say, there's a week, this is not a bearish engulfing now. Why? Because the bearish candle does not start, it does not have a base or swallow this one completely, right? Let's look for one that is going to be a bearish engulfing. Very perfect example right here. Just like the one with the bullish engulfing right now. This bearish engulfing candle is completely, swallowing up this green one, of which it was this green candle that actually created this. After this green candle closed, this candle came up to this point for a while before falling down here and then opening. You understand that, right? So that is why after that, it still came here, covered and engulfed all of this. And after that, what did you see? A quick scalp sale, right? These are things you just look for in the market. When I see them in the market, sometimes I just fall into a position, I just take a sharp entry. Yeah. But don't forget, we are not talking about analysis now. We are still trying to explain candlestick types, which we've explained. Yeah. Parts of candlesticks, which I've explained: the wick, body, open, close, high, low, right? And now I am explaining patterns and formations, which is the engulfing. And for us to understand this engulfing, we needed to first of all understand wicks, right? And body. Now that we understand wicks and body, we know how to join them together to find out maybe the chart we are seeing is an engulfing or not. Is that not so? Yes. Is that so? Yes. That's good. So if there are any questions right now as to this, explanation, I believe it is. I tried to make it quite simple. Really, start from the basics, start from the top. Don't miss any second, don't miss any minute, so that you'll be able to understand. You have to take it from the foundation, then lay your block, then lay the roots on it. If you do not understand what a wick is, or what a body is, or the open or the close now, there's no way you will be able to understand why I am selecting this one and I am not selecting this one, right? Because I'm not selecting this one now because the wick of this is still above this candle, is not engulfing it completely, right? This is an engulfing because it's swallowing it completely. We saw another example somewhere here. This one is to the opposite direction because it is swallowing the red one completely, right? So that is an engulfing pattern. I believe that's that, and that is simple. Now we have the hammer and the shooting stars. No, it's just three. It's going to be quite fast, quite explanatory. We have the hammer and shooting star. And this is what it looks like. The hammer and the shooting star. It's the name is actually quite explanatory for the hammer. Now, what is happening in this situation is that I'm sure you know that whenever you see a wick, it means price price had previously come to that place and pushed back up, right? If you see a week like this, you know price was formerly in this place, then pushed back down before the original sell candle started, right? In this kind of situation, when you see something looking like this on the higher time frame, you know, before I said when you see like this, yeah, it's your bearish engulfing, right? But sometimes it's not every time that you see how many minutes we took before we could bring out even two bearish or bullish engulfing in the pattern, right? So sometimes it might not be bullish engulfing that your eyes or bearish engulfing that your eyes would catch first. It might be a shooting star or a hammer, right? When what is happening in a hammer, let me quickly give you a brief explanation so you understand. It means whenever you see an hammer, it means that buyers are trying to push price back up. Yeah, because price had gotten here before, right? Buyers are trying to push the price back up. That's what you should just know. When you see a shooting star, know that sellers are trying to push the price back down. Let's look at this. Let's look at this as an example. Now, I would not necessarily take, I'm sure if I break this candle down now, on lower time frames, because this is the weekly time frame, do not forget. I'm sure we're going to see that candles like this that look like, candles that have wicks on higher time frames might actually be solid candles on lower time frames. Okay. We're trying to look for a shooting star or a hammer. And like I said, we always try to look for all of this, at maybe at the supply zone or at the resistance zone or at the demand zone. And what I mean by all those zones is that always try to look for it at the last point that market gets to before retracing. The last high that market gets to before retracing. Yeah. Try to look for one that would fit our example pattern. Let's see an hammer. I'm going to take this as our hammer just to give you, that one is not working. Okay. Good. I can say this is my hammer right here. Now look at this. Price in this situation here. This is GBP USD. This happened on August. You can look at the date down here at the bottom of the page. This happened around June, July, August 2008. Yeah. Price started its downtrend from this position and came down here, right? I can say this is the final support for this point because after I got here, I rejected and price has been going up since then, right? But I want you to now notice something here. What do we see here? A clear shooting star. Right? Or it doesn't look like the drawing. The reason why I would choose it as a shooting star is that the body must not be up to 50% of the whole candle. The body must not be up to 50%. The wick must make up more than 50% of the candle for it to qualify as a shooting star or a hammer. You get what I'm saying? In bullish engulfing, I gave you some criteria. I said it has to fully engulf it. The whole thing, including the wicks, including the body, including the eye, the clothes. It has to be engulfing candle has to cover everything. If the other candle has a little part that escapes like that, it is not engulfing it fully, right? Those are confirmations. Confirmations for you to find out maybe that is a shooting star or not is that the body must not be up to 50% of the full candle. In this kind of situation, I did not choose this because the body is more than the weak. In this kind of situation, I did not choose this particular one here too, because of what? See the weak quite short, the body is longer, even though it is upside down and looks almost like this, but only that the body is a little bit longer. So when you are looking for your shooting star or your armor confirmations, on the higher time frame, guys, I know a lot of people always use it on lower time frames. Of course, you will see it on lower time frames, but I don't believe it was made, for lower time frames. People use it actually. That's what I'm saying. Nothing is ever 100% in forex here. Your method that you believe might not be working, someone else will use it in front of you and you make consistent profit, right? So you focus on one strategy, you focus on your methods that you understand it very well, then you can pick up other styles, you can pick up other knowledge. Yeah, but don't just pick one, eat it halfway, then drop it again, pick another one, eat it halfway. You now confuse yourself totally, right? Know that the body of the candle must not be up to 50% of the full candle. Yeah. What I mean is this might be the full candle. The body must not be up to 50%. Right? The body will be somewhere here. If this is the full candle, the body must not be up to here. You get my point? It has to be like somewhere here. If this is the full candle, just so small, the body has to be very, very tiny. Get what I'm saying? Even if it is to the opposite direction, so it has to be the same thing. It must not be up to 50. Once it's getting close to 50. Normally, you will not, there's no way to know maybe it's 50 or not, but then I'm pretty sure we all have something called psychology. You will not tell me you see this one and tell me it's no more than 50. Even your sense will tell you, there's just that intuition that will tell you, this one up, it don't pass half. When you see stuff like this, you know that it is a sell. And what did I say again? Another thing that has to happen for it to be a valid shooting star is that it has to happen at the top of the movement. When it always happens at the final top, right? That signifies that a major sell is about to start, because this candle that you are seeing here on the higher time frame, it took 1 full week to be completed. This is higher time frame. That's why I say look for confirmations on higher time frame. Immediately this candle closes on the higher time frame, it will be very, very obvious that it is a sell, because what? Look at the next candle that opened. It opened directly below the close of this candle. This is the close of this candle. This is the open, this is the close. I hope you know. Yeah, and the next one opened directly below. Mind you, this is 1 week candle. It is not going to just fall immediately. This one candle took 1 week to fall to this position. Right? That's why we look for these things on the higher time frame. Okay, if you do it on the lower time frame, this one will happen now. It will give you these moves that you are seeing. This move from year to year alone started in December 3, 2007, and ended in February 4, 2008. So you are seeing that from year to year, now like 3 months you will look. So don't get confused, don't get it twisted. Always try and do your stuff on the higher time frame. Right? The more we go into analysis, the more I'm going to explain why higher time frames are very important in trading. Right? Because 15 minutes, 1 hour, the thing would have gone, come back, you don't know what you're doing. Higher time frames will give you the chance to view the market on a larger scale, on a larger view. You would have monthly, you'll be able to hold your trade for a week, for a month, right? Knowing where it is going to, even if you retrace, you know that this is where it's going to. This is how you find it out. Now let us try and look for the opposite of a shooting star, which is what? Armor. The armor has to just be like something like this, but totally the opposite, just in the opposite direction and green, right? And has to be there. It has to be somewhere around a support or demand zone. Yeah, I will not be looking when I'm looking for my shooting star, which is the red one. I would not come and be looking for it down here. I have to be looking for it up here, right? Because why? Because sellers are pushing price down. So it has to, if price had been going like this previously, it has been going like this previously. And you see that price suddenly started coming down like this on the higher time frame. I want you to go back and look somewhere around here. You will see something like a shooting star here. Shooting stars always signifies, always calls, always shows as confirmations for major sells, right? Always look for it. If you do not see a bullish, if you do not see a bearish engulfing at that exact top side, you will see a shooting star. It is definite, right? It is the same in the opposite direction. If market had been, if market had been coming down like this before, and you suddenly see a buy to the upside, a sudden impulse, guys, I want you to come here and look for this place. Look at this area. You will see something like a hammer on higher time frames. Please, I'm not talking 4 hours, I'm not talking 1 hour, I'm talking 1 day, 1 week. Yeah, 4 hours is actually good, time frame for a candle to form. Yeah, but on the lower time frame, these sort of confirmations too are good, but you have to understand the reason and scenario where they will be used. If you've watched my videos or you've seen me, or you've been in any of my live classes, you realize that I always do everything on the higher time frame. I hardly enter the lower time frame unless I cannot see anything on the higher time frame, unless there's nothing to be seen there. So guys, I just want you to listen to me and please stick with the higher time frame always. Yeah, people say higher time frame, they believe it is for swinging and that they want to scalp. Yeah, anyways, I already made an explanation about that in a different video, so I'm not going to go into that right now. Let us try and complete what we are doing right now. Okay, we already understand that when we have a structure going upwards and we suddenly see a change in direction, there's something that happened there, right? And normally, if you're looking for confirmations, if you see a shooting star there, it is a good confirmation for you that wow, market has changed structure, right? Or you see what you see something like this. You see something like a sell, or you see something like a bearish engulfing. Yeah, you are going to see that, see this or this right up there. Is it that you see a bearish engulfing, or you see, let me write it there. Bearish engulfing formations, patterns, or shooting star. I need to write that actually. That's self-explanatory. At the change of a bullish structure to a bearish structure, we are going to see a shooting star of bearish engulfing. At the change of a bearish structure to a bullish structure, we are going to see a hammer or what, or a bullish engulfing. You see that these patterns are just simply used for confirmation. Yeah, that's why when if you remember the last video, I had to pause when we started making analysis. I was talking about trend line, that the trend line has to be placed on top of the week. Now, if I'm talking about trend line has to be placed on top of the week, I'm pretty sure most of us will not have any issue now, right? Because before, most of us did not know what a week was, right? But now that we know what a week is, you know that you should place your trend line. You should start from this week and touch this week and elongate it like that. You see that's what I was trying to explain the other day. But if I did not make this brief video now, there's no way you would understand what I mean when I say make sure it touches the week, right? So that is that, and I believe we literally covered most of the things I wanted us to cover here. But what I want us to now see is we found our shooting star. We need to get a hammer. Right now, I can take this as my hammer right here, because this is the last this is the last thing done. Just the same way this happened up here, right? You see, this is like literally the last top side. I'm using this to show the actual zone where this small one that is inside here is our shooting star. Yeah, but it happened inside this zone. When you zoom out, you can see that zone is literally the highest point that markets moved to, right? Now, look at where I think we found a hammer, right? It happened literally at the bottom zone where markets moved to, the last zone where market moved to, before we saw another move to the upside again, right? Even if it is short term, even if it is long term, but remember that we are on the weekly time frame. What you are looking at from year to year, 2 months, 2 days, 2 weeks, sometimes you realize that, even if it is one candle, it is 1 full week. That's 7 whole days, right? That's a lot of pips in movement, right? So always work on the higher time frame, even if it looks small like this. This zone to this zone on higher time frame can give you millions. Yeah, somebody on lower time frame from year to year we lose, we chase it back again, we lose, we chase it back again because he's not reading his market on the higher time frame. Now, when we come to the lower time frame, when we come to look at the bottom here, when I was able to find one quite easily, yeah, we can see that this what I highlighted up there and what I marked at the bottom here, they are just like word and opposite of each other. This red I marked and this green I marked, they are just like word and opposite of each other. Why this one qualifies as my hammer is why is what? Why did I not use this one as my hammer? Why did I not use this one as my hammer? Or this one?
No, it's not.
In fact, I do not even see this one here. I can literally see like two hammer confirmations here. That would have given me my entry for a time straight up. You can see the hammer and marking out here. This is one right here. This is another one right here. This is one right here. You can see that this is a very obvious clear hammer. Just like the one I marked out up there. The body is not up to 50% of this whole candle length, right? And it's shaped almost just like an hammer because you will just see that tiny, just like that tiny thing that used to be on top of hammer. And sometimes it might not be there, or sometimes that wick might be there, but the shape will be very peculiar to you. That guy, this is that, right? This is one here, very very clear. This is one very very clear. You can see we cannot use this one because the body is more than 50% of the whole candle height. Right, we cannot use this one too because it is more than that. But then we've already seen clear confirmation here. This happened because price had already come down here, then suddenly boom. When you see a sudden movement like that, a sudden rejection, a sharp movement in price, something has happened. There has to be a switch, right? That is why after that we can see a bullish but continuation very very easily, right? So other than that, I think that's all I'm going to talk about right now. Because I know we also have the doji. Dojis are indecision candles. Whenever you see a doji in the market, do not trade, right? Dojis are very, very self-explanatory. Let me just clean this up so it's nothing like I did not touch that too. Very, very self-explanatory. There's nothing to call out on the doji. There is no price movement happening. We have price like this, or like this, or like this. Nobody on the candle. A candle that has nobody. We have price like this. It could be red or okay. It's literally the same thing I do. Yeah, but it could either be red or green because this means that market started from here, came here, and reversed back to the exact place it started and closed. This one means that market started in the middle here, came up, rejected back to this place, created a red candle self, then the red still came back up and closed here again. Right? That's how it is. It's very self-explanatory. Look at it here. I think I said here that was what made me. I saw one here that was what made me. No, that was not what I saw. This one is a morning star. Yeah, morning star. This is a morning star formation right here. Evening star, morning star formation. Okay. I know you are going to go and read anything. Evening star and morning star. Sorry. Morning star. I believe that's all. Let me explain. I've explained the doji. When you say doji means indecision in the market. Don't trade. The reason why I suddenly remembered evening star and morning star is this one that I saw right here. Right. This is exactly how evening star and morning stars happen on the higher time frames. I told you this is your doji, indecision in the market. Market is not moving up, it is not moving down. Market is just it opened and closed in the same position. Opened here, moved down here, came back to close. This one had already moved up. Market pushed it back down, then came back to close again. Yeah, market had come down before it came back to close where it opened. So that's just a doji is literally indecision candles. Okay, that's what doji are. But then for the last but not the least, not the least of its set, not the least of its mates, right? The evening, the evening star and the morning star. Yeah, evening star, morning star. Don't let me confuse with the shooting star. Now, evening stars occur like this. Evening stars would have, would have your armor like, or it could be an armor, it could be a shooting star, yeah, or a doji, right? Or you have it. Strike say personality, just word and opposite of each other, right? This one says that price has been going up before, yeah. This actually occurs also like your shooting star and your armor that you have to look for at places where price is going to change structure, right? Price was going up before. Normally, when we see a shooting star, right, you know it's going to sell. But if you are not sure maybe price is going to sell or not, and you want to wait for confirmation, price must not open above this, above the body of this shooting star for it to qualify as an evening star. So you get what I'm saying? For it to qualify as an evening star, the next candle that opens after a shooting star must continue downward, must continue bearish, and maybe be equal to or even engulf, previous candle. So look at this one. So price was coming down before we got an hammer. We are not sure, maybe price will still want to come back down. Then you wait for price to continue with movement, or price now engulfs this one or is almost at the same length. This will be your morning star, this will be your evening star, because evening is coming down, morning star goes rising up, evening star coming down. That's what I saw here, right here. Very, 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 very clear example. Right here that made me, bring up that particular one. Very, very clear example there. We're having our impulse on the bottom from that our armor down there. Then suddenly there's a shooting star, boom. Because after this price, so the price got to this point and rejected early. Then suddenly we can see that this price has pushed almost engulfing this, created another one below it again, almost engulfing. I have my sell, price never go back to this point and continued selling downward. Yeah. So really, guys, there's nothing much to candles. This is everything you need to know about. This is all the basics you need to know about candles. I promise you that no matter where else you go, no matter what materials you are reading or what books or what anything related to trading that you are checking out, yeah, related to candlestick, these are the same basic things you always need. Now, people might have different names for different patterns, guys. Remember this, like I always say. Different names, different patterns. When you come across a word you don't understand in Forex, Google is your friend. There are a lot of resources out there for you to use, right? Go online, try and search. Maybe that word is referring to something which you actually know, but they are just using another name for it. I was also confused when I started knowing SMC because I'm already used to institutional candles. Yeah. So please and please just make sure that whatever you learn, whatever you read, whatever you watch, even not just from me, from any trader, from anywhere, you try and always, make your own research, do your own reading. You can only learn the rudiments, even if a mentor decides to teach you everything you know, right? It is there for you to still practice, it is there for you to still read and research on your own, guys. So I'm glad I stopped the previous video to make this one and explain everything about candles. Now I believe when I'm mentioning wicks or I'm mentioning candle open, candle close bodies, it should not be strange to most of us anymore. Right? So I believe this was a very, very, very fulfilling class for me because I literally touched everything I didn't want to touch. And right now when I'm explaining analysis and I'm saying make sure the trend is touching the candle lines and make sure the trend is touching the wicks. I'm sure most of us we already know what wicks are like that. So Kudos, guys. If you have any questions, feel free to drop it in the comments. Do not forget to like, share, subscribe, and join our community to with more free knowledge like this. Yeah. Expect my next videos from now henceforth to be, totally talking about proper risk management, pips, how to calculate your pips, how to set stop losses, and all of that. Hopefully, my next class will be a live Zoom session with more than one person active. Hopefully. All right. So, till then, guys, thank you very much.